So recently I've been getting a lot of questions about mortgage interest rates possibly rising. On this episode of Melanie Loves Tampa Bay, I'm going to share a little perspective on that topic. Hey everybody, Melanie Atkinson here, realtor with Smith & Associates in beautiful Tampa Bay, Florida, and today I'm going to talk to you about the very riveting subject of mortgage interest rates. Now don't go to sleep yet, I'm going to try to make it interesting. I thought this was an important topic to get into as we go into 2019 because I'm getting the question about mortgage interest rates more and more these days. We hear on the news all the time that mortgage rates are rising, and people want to know how that will affect the housing market. Well, I wish I could whip out my crystal ball and tell you all exactly what's going to happen with rates and the housing market in the next year, but that's not something that's possible. What I am capable of is breaking down the data and looking at mortgage interest rates from a historical perspective, and then taking that data and showing you what your money can buy today. Cue the super interesting historical chart. This chart is from the Freddie Mac website and is showing what the annual average mortgage rate for fixed rate mortgages has been since 1972. Now, when I pulled this data, November and December 2018 had not been posted yet, so the average that you see there is for rates from January through October 2018. Now, there's lots of interesting information in this chart. First off, it was very expensive to borrow money in the 1980s. Look at those rates. I have family and I've worked with clients that remember paying those interest rates for a mortgage. It seems almost unbelievable that people were paying over 16% for their mortgage interest rates. But at that time they were, and for an entire decade, the rates never averaged below 10%. Even in more recent times, say for example in 2000, rates averaged over 8%. And when we saw the peak of the housing market in the mid-2000s in Tampa, rates weren't at rock bottom. They were in the high 5s and low 6% range. Since then, rates have been significantly lower, with the lowest average mortgage interest rate coming in 2016 at 3.65%. Now, yes, it would have been great to lock in a 30-year fixed rate mortgage back when it was at its lowest in 2016, but not all of you were ready back then. Don't beat yourself up about not locking in a rate when it was at the bottom. The interest rates had to go up at some point. That's just basic economics. Instead, focus on how historically the interest rates that we're seeing today, even as they creep into 5%, are still very reasonable. Now let's do a little math so I can show you how your principal and interest payment changes as mortgage rates get a little bit higher. But first, a very important disclosure. I am not a licensed mortgage broker. I'm a real estate agent. So if you want specifics regarding your loan, you need to talk to a licensed mortgage broker. The information I'm going to share with you, I got from using an online mortgage calculator on Zillow. Your total monthly mortgage payment is typically made up of more than just principal and interest. A lot of times you're going to have an escrow account that pays for taxes and insurance, and sometimes depending on your loan amount, you're going to have private mortgage insurance in there as well. These examples are just looking at the principal and interest portion of the loan. To get an accurate quote on a mortgage loan, please contact a licensed mortgage broker or give me a call and I will get you in touch with a great one. Okay, say for example, you take out a $200,000 fixed rate mortgage loan and your interest is at 5%. The principal and interest portion of that payment will be approximately $1,074 a month. If interest rates rise to say 5.5%, that same $200,000 loan will increase to $1,136 a month. That's a $62 a month difference. If rates were then to rise to 6%, you're looking at $1,199 a month for a $200,000 loan. That is a $125 a month difference from the 5% rate. Now let's do an example with a higher loan amount. Say you're borrowing $400,000 at 5%. Your principal and interest portion will be approximately $2,147 a month. At 5.5%, that same $400,000 will cost you $2,271 a month, a $124 a month difference. At 6%, it will be $2,398 a month. So just for fun, let's see what we could afford if the interest rates were what they were back in 1981 when rates averaged 16.63%. For the same amount of money per month as the $200,000 loan at 5%, which was $1,074, you can afford about a $75,000 loan at that 16.63%. That doesn't really work with today's prices, so let's be glad the rates aren't anywhere near this historical high. So, should you look to buy this year even if interest rates are a little bit higher than they have been in the past couple of years? I would answer that question with a few more questions. First, do you need a new home, whether it's a move-up home or your first home? Secondly, do you have stable employment that allows you to afford the monthly payments? And finally, have you been renting for a long time and you finally want to start taking advantages of the tax breaks that you get when you own a home? And that is a really big point. In case you didn't realize it, the mortgage interest that you're paying all year long is actually tax deductible. That is a huge advantage over renting. If the answer to any of those questions is yes, then buy a house. Don't let interest rates get in your way. Historically, they are still very low. Do your research and partner up with a great real estate agent and a great mortgage lender. Happy house hunting, everybody. And remember, if you're looking for a home in the Tampa Bay area, give me a call. I'd love to help you out. Thank you so much for joining me on this episode of Melanie Loves Tampa Bay. If you like this video, please click the like button below. Or if you're interested in learning more about home trends, real estate, or life in the Tampa Bay area, please consider subscribing to this channel, Melanie Loves Tampa Bay, or follow me on Instagram, Facebook, or Twitter, or check out my website, MelanieLovesTampaBay.com. Thank you so much, and I'll see you next time. With love, Melanie.